Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is March 21st, 2023. This is Morning Forex Technical Report, where I take a look at the technicals that are driving the currency markets. So let's get started. We're seeing risk-on sentiment today as the banking industry is moving higher. First Republican shares are up 23.65%. Of course, they fell 47% yesterday, but anything to the upside is good news, and that's sending yields higher as well, with the U.S. two-year yield now up 21 basis points, back above the 4% level at 4.134%. We have the Federal Reserve meeting tomorrow, which is going to be key going forward. The expectations are now fairly solidly in the 25 basis point hike range, but what is going to be key is the expectations for things like growth and PC inflation and unemployment and the terminal rate. If they raise 25 basis points, that'll take the rate to 5.0%. If the Fed then goes on pause because maybe they went a little bit too far, too fast, as measured from the problems that we see in the banking sector, then that would set a terminal rate of 5%, which is less than the terminal rate that they forecasted in December at 5.11%, which is basically between 5% and 5.25% as the target rate for the Fed funds future. So that would be an interesting development. To recall, it wasn't just a week or so ago that the expectations were for the target rate to be up 5.75%, and some people calling for 6%. So quite a bit of a change, and that led to lower yields. A two-year yield, although at 4.13%, is still well down from the 5.08985% that we saw just 8 or 9 or 10 days ago. So that's a big move to the downside, and perhaps that's helping to spur on some stock buying. But we'll see how rates react tomorrow, I guess. Let's take a look at the euro versus US dollar. And the euro is cheering on less pressure from Credit Suisse. We're seeing UBS shares higher in the pre-market for US stocks. For that, we are seeing UBS shares higher, which is helping to push the European yields higher, as well as banking concerns start to fade away over there. The German 10-year yield, by the way, is up around 17 basis points, currently at 2.274%. So big move to the upside here in the euro versus US dollar. Where it came off of was a nice little area here where we had this swing area, a number of different highs right here forming a nice ceiling here. And then in trading last week, the prices did fluctuate rather volatile in a volatile fashion as a result of, well, the volatile banking and ECB meetings, so on and so forth. But in this week's trading yesterday, matter of fact, we moved above this swing area, and then we held support against it on this dip before closing up here in the Asian session. What did we do? We came down right to the high of this swing area, found support buyers against that level to give the buyers the go ahead to push to the upside. And that move to the upside took the price above this little ceiling through here, which was broken and then reestablished right here before moving sharply to the downside. So you can see here where we tried to hold resistance in that ceiling right here, bounce or move back to the downside here, and then reestablish the strength to get to and through that area. So guess what? This high right here is going to be our close support of 1.07592. For traders looking for more upside momentum, you can use this area right through here. The swing highs at 1.0752 down to 1.0744 as your support level. If the price is able to stay above that level, the bias remains to the upside for the euro versus US dollar. Taking a look at the daily chart really quickly for giggles. We are in this swing area here. This goes back quite a long ways, where we had a swing low right here, and then we found some swing lows through here, and resistance right there, which forced the market to the downside. We came back up to that area, found sellers in here again in the yellow area. Then more recently, we found sellers here and buyers here in that area before moving to the upside, and then moving to the downside here using that level. So up to 1.0805 is this where this swing area is. If we get above
should have just
1.085, that would be
update.
more bullish. If we
Just in
we
terms
could
of the
see
date
also
of this,
sellers
it's
against this
being
level
framed
as the
as data
market
for the week
runs to the
March
top side and then
20th
starts to
to
come
euros.
off a little bit. So be aware of that. Key resistance at 1.085, 1.0805 in the euro versus US dollar on the daily chart. Let's take a look at the dollar versus yen and looking at the 4-hour chart to get a broader view of this. And what I like about this is that in yesterday's low price came right into this swing area. You can see the different swing highs right here where the market found a ceiling here, moved above that ceiling, moved higher, then came back down into what was the old ceiling, now the floor. We had one failed break to the downside right here before reestablishing a support against the level right here and moving to the upside. So that's where the market found support yesterday, which is good news for the buyers. They're still in play, and we're seeing the dollar move higher and trading here today as interest rates move higher as well. Watch this area right up here. This is an old level right here, and we kind of came up to that high price or the high price yesterday came up to that level near 132.72 up to 132.90, and if we get above that level, that would be open the door for a move toward the 38.2% retracement in the dollar versus yen. So seeing U.S. rates move higher, helping to propel the dollar yen to the upside as well. Let's take a look at the sterling versus U.S. dollar. That's not moving like we saw in the euro versus U.S. dollar to the upside here. And why? Well, we may be able to attribute the technicals for this reason. We have a swing low, swing low, swing low, swing low, and then we moved to below that level, came up, used it as resistance. So a nice little floor here, then becomes a ceiling. And in trading yesterday, the market moved up to the high of that area. This is a 4-hour chart. Moved to the high of that area and found willing sellers near the 122.82 level. And you can see rotation back to the downside here. So we had some technical selling against that level. And we saw the sterling versus US dollar move a little bit more to the downside. So if the price is going to go higher, we need to get above the swing area at 122.60. That would be our first target to get above here. You can see over the last couple of 4-hour bars, the price has been finding resistance against that 6122.608 level. If the price can stay below that level, that would be more keep the bears more in control. If we move back above that level, we would start to dig into this swing area, looking for a break above the 122.82 level to give the go-ahead for further upside. For now, though, we're currently trading at 122.40, and that is showing some sellers against that swing area. We'll see if those bearish bias clues can remain in play in trading here today. Once again, stock market's up strongly in pre-market trading. Dow up 300 points, Nasdaq up 76 points, the S&P up 34 points. But the big event tomorrow is the Federal Reserve interest rate decision that will take place at 2 p.m. ET, followed by the press conference with Fed Chair Powell's, which will take place at 2:30. Lots of stuff to think about. We will see how it all pans out. My name is Greg Mikulowski. Good fortune trading. Bye bye.